Hi, and welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and this is Friday night's video, October 3rd's video being made on October 5th. But the main idea is to get this out before the opening on Monday, so we're going to accomplish that goal. Okay, Friday. Friday had to be a total disappointment to every trader and every investor who plays this game, because most people would have believed that when the package got passed, that would probably lift the market. Well, just the opposite happened, which is no surprise in this business. We came in Friday morning with my indicator pretty oversold. I was looking for some sort of a kickback rally, and that's exactly what we got. As a matter of fact, we got almost 350-point rally one time during the day. My indicator, early in the afternoon, my indicator got a little bit overbought, and the bill was passed, and not only did we give back the 350 points, but we added an extra 150 onto it after that. So, typical Friday, nobody wants to go home with them. They act bad. All the indexes are making lower lows and lower highs. I don't believe the low is in. I don't know how low we have to go. But, once we build a pattern, a bullish pattern, we'll see it. But it's definitely not in the cards yet. As a matter of fact, we have nothing to look at right now but resistance on top of us. So that's what we're focused on. We're going to be a seller of all the rallies. So in the final segment, we'll take a look at all our major indexes, and I'll point out where these resistance areas are. For tomorrow, I've got a new idea. It's PER, P-E-R is the symbol. I actually had to make this video all over again. The stock I had picked out, I didn't realize was on the SEC's no short list. And it's a great looking short chart. It's AGO, Accured Insurance Company, and it has options. So if you guys want to take a look at it and play it through the option market, but it's on their no short list, so I can't recommend it. So I got to make the video all over again. Anyway, we've got one. It's PER, P-E-R. It's almost as good looking, and then we'll take a look at the other stock we sold short Friday. Radio Shack, that's working out pretty good for us already. And then we'll look at the final segment. In our final segment, we'll look at the major indexes. So we'll take a look at the chart for PER. I'll show you how we're going to take this idea and turn it into some money. Now, don't go away. I'll be right back. Okay, we're looking at a daily bar chart of PER, and this is a call on the short side. Look at the seller stock short Monday between $16.62. That's exactly where it closed. It closed right on the low of the day, and up to 17, which is what we would like to. We'd like to see a little bit of another little rally in the morning. Any rally up into this area here it would just be a great gift to get the short off. So between 16.62 and 17 would be a great spot. If it even goes a little higher than 17, it still doesn't change anything. If it were to break down quickly, don't chase after it. Wait for it. Always wait for the kickback to put the short out. My target on the downside is $11.50 right down here, where this whole rally started from. Buy stop, I'm going to zoom in a little bit here. My buy stop, in case the pattern doesn't look right, I would say a close above 1763 might change the look. You may want to even give a little more room than that. Okay, what do I see? Well, we've got this descending triangle, which is a very common pattern right now, because the market's almost in a free fall situation. And so that was our first support that we broke down out of. Then we kicked back, and now we've broken down out of that little consolidation area here, broken down out of that support area, and we've kicked back into it already. So for it to kick back one more time would be unusual. So if you can get it off anywhere near the last sale, I think you'd be doing good. Anyway, you can see this descending triangle. It also has that the House of Cards look. See it? The roof look, very bearish formation. When we see these formations turned around upside down, then we'll know when to buy them. But not till then. Okay, let me recap that. That's PER. It's a call on the short side. And I think with some patience, because it looks like it's a long way off, I think we can make ourselves about $5 on that trade. Okay, let's take a look at Radio Shack, the stock we sold on Friday. I got this off at 1663. I think it was 1664. I don't have that number in front of me again. But you can see it just collapsed. So, if you miss this and it kicks back tomorrow up into this area, it's still a great short, because this is our target way down here. So if you get a rally into this and you didn't get it off, or if you want to add, I don't like getting to positions, especially bad ones, but anybody who missed it and it rallies back up into this area tomorrow, don't be afraid to sell it short. Okay, we'll put that into a portfolio, and hopefully in a couple of weeks or a week or so we'll be able to ring the register in that. Let's move on to the major indexes, and they're just getting worse looking. This is the Dow. And you can see another lower low. They just keep making these staircases here, Step down, step down, step down, step down, step down. So where's our resistance? Resistance is right here. It's about where the market got to on Friday, the high of the day on Friday, and collapsed. So when you kick back up into here, we got to be a seller. Okay, I still think this is not down far enough to warrant a rally. We've got to get some sort of a big pullback like this. So we may only be halfway down. It's just a guess, though, but it doesn't look right yet for any kind of a kickback. Transportation average, just extending its losses. This now is our resistance area, and it's just once it comes through that support area, they accelerate. I'll show you what I mean when we take a look at the Russell 2000. This is the Russell 2000. I remember telling you on Thursday that this is the third time down to this support area here, and the odds are, the probabilities in this game, because this is a game of probabilities, the probabilities were extremely high that the support was not going to hold and it was going to break, and it's exactly what happened. And a lot of times when it breaks a double or a triple bottom like that, it really tends to accelerate itself quickly on the downside without a kickback rally first. And that looks like exactly what's going on here. But anyway, if it does kick back, this is our resistance area. That whole area that used to be the support is now resistance. SPY represents the Standard & Poor's 500. Looks just like the Dow, This is our major resistance right in here. And we have a little minor resistance right there, the top of this pattern, if it were to kick back. But if it were to get through that, this is pretty major resistance. This is what we call overhead supply. All these people who bought in here just wish that the market would rally back up into there so they could get even again. That's why there'll be sellers up in there if it gets there. QQQQs, of all the pattern, let me point out the major resistance. It's this formation right here. Same theory holds true. All these people who bought in here, they're wishing that it could just get back there so they could get even. But what's a little interesting about this pattern is that it is extended quite a bit from its high. And, things don't go down forever. So this is quite a bit an extension, and there's a possibility. Let me turn this into a 9-day chart so you can see how long the extension is. I mean, from here to here in a straight line, it's very unusual. So I wouldn't be a bit surprised if maybe, this doesn't quite accelerate as much as the other indexes, but we'll wait and see. I'm just pointing out how extended it is. It's a little bit, that's a little bit extended without some sort of a kickback. But anyway, our major resistance is right here. Any kickback isn't really going to get through that area. But we'll have to see how it develops. But it's the only, of all the indexes, it's the only one that's really extended on the downside. All the others, to me, look like they have further to go. Okay, that's my view of the market till Monday. This is TK signing off.